Hi, this is Kristy with Pack Tax. Okay, so tax season is over, but like, is it really? I wanted to share a question that I just got from a client yesterday. It said, Kristy, I'm gonna move. I'm thinking of selling my house, but I haven't lived in it for 2 years. Do I have to pay tax on it? What should I do? For this client, he had moved in August 2 years ago, and it's not quite August again, and so he's wondering, man, do I have to stick it out another few months? Do I need to stay the full 2 years in order to avoid the gains on the tax? Probably not. So this is your primary residence as long as you live in the house for 2 of the prior 5 years, 24 months, and here's the key, 24 months, you get out of capital gains up to a certain limit. So if you're single, you can make on the house up to $250,000, and that part is excluded. You're really looking at what's the difference between the price I purchased it at and now the price I'm selling it at. What matters is how much did you buy it for? How much did you sell it for? When did you buy it? When did you sell it? As long as you lived in it for 2 years of the past 5. If that difference is less than $250,000, then there's no tax to pay on the house. And that's if you're single. If you're married, that can be $500,000 and you won't have to pay on it. So if 10 years ago I bought a house at $300,000 and now I've lived in it and now I'm going to sell it and I'm selling it for $550, is anything taxable? No, because I bought it for $300, I'm selling it for $550. That's $250,000 of a gain. And even if I'm single, I get to exclude $250,000. If I'm married, I could have made $500, which means I could have bought it at $300,000 and sold it at $800,000, and still none of it is taxable. Once you sell this house, you can do anything you want to do with the money. You don't have to go buy another house. If it's taxable, you're going to pay tax on it. If it's not taxable, you don't have to pay tax on it at all. Here's back to this question that the client had. He didn't quite live in it for 24 months. Does he have to wait the full 24 months or now have to pay tax on the whole thing? We get to prorate it. Let's say that he's going to live in there 21 months. So we'd go 21 divided by 24. That percentage of his exclusion is what he can gain without having to pay tax on it. So he's going to nearly be able to exclude the full $250,000. I can tell him 100% that we know nothing will be taxable, and he does not need to wait for 3 more months so that he hits the 24-month mark, because his gain's already only going to be $100,000. Even if he waited the full 24 months, that makes that he could exclude 250. He doesn't need it. Usually there won't be enough of a gain that it is taxable. If it looks like there is going to be a gain that is taxable, we also get to include the expenses of the sale and potentially the expenses of the purchase. So what I'm talking about is closing costs. That adds in. We'll also look at any value that you put into the house. That goes into what your price of the house is. Long story short, it's not all or nothing. If you have questions, please reach out to us, guys. All of our locations are open this summer. Give us a call, text us. We love to answer these kind of questions.